Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be taking a look at Phillips 66 stock, ticker PSX, and I'm going to throw in some other refining stocks and talk about those in general. This one came in by request down in the comment section of one of my other videos. It was down 5% today, and it looks like it's kind of starting a downturn here. So we're going to take a look at it, and I'll share my thoughts on it along with a couple others. If you have a request for a stock you'd like me to take a look at, just put it down in the comments. I'll get the ticker on the whiteboard behind me. Eventually I will make a video. If it's a stock that's in the S&P 500, I post those on YouTube for free. The rest I post over on Patreon at the $5 per month tier level. There's also a free level tier on Patreon where I post all these videos from YouTube over there. So if you don't want to miss any of them, if you don't want to have to depend on the YouTube algorithm to see my videos, that's a good way to do that. And then I also have a $25 per month tier where I share a stock idea each week. I started that in October. It's been doing really well so far. Everybody's really liked it that's tried it out. So consider trying that out. And then of course I have the full Cyclical Investors Club service over on cyclical Alpha. So I have all those links down in the description if you're interested. And let's get into Phillips 66. So I always like to start off talking about any history that I have with the stock. And I do have one with Phillips 66. So they spun off, like, it used to be Conoco Phillips, I think. And then around 2012, they split up that business, and Phillips 66 was more of the refining end, but they have like midstream stuff now. So a little bit more diversified than a straight up refiner. But I kind of think of them that way still, or when I bought them I did, even though I knew that that wasn't their entire business. Honestly, like a lot of oil stocks trade similarly, but I will say I do like these type of oil stocks a little bit better than some of the other ones. I definitely like usually the bigger ones, the more reliable ones, because usually you can depend on them, their cycles to like come back. So when I bought this one, it was in 2020, right after the vaccines were announced. So they came out right about here, and then I might have actually bought it. If I didn't buy it on the 6th, I bought it like in this week right here. I bought it along with Valero and what is now HF Sinclair. The ticker for that one is Dino, D-I-N-O. It's a smaller cap refiner. And I got doubles on. I actually made videos on the Dino and Valero here on the channel way back in 2020, early 2021. I don't think I included Phillips 66 in that. So I took double positions in all those, all at the same time. The other two produced 100% returns. Phillips 66 was a little frustrating for me. I held it, I want to say, was this in the summer here? Yeah. I think I held it all the way through here, and I made maybe like 40 or 50%, while the others returned 100%. And I just got a little frustrated with it, and I really prefer the refining end rather than the midstream stuff, and they were buying some of that. And so I sold it when I should have probably hung on to for my original goal of a double, which it immediately went to do as soon as I sold it. So a little more patience on my end would have worked the last time I bought it. I will try to keep that in mind the next time I buy it, and I would buy it again at the right price. So we don't have a long history here because they used to be part of Conoco. But they're well established enough. I mean, the company's been around since like the late 1800s, so it's not like a new business. But we don't have a lot of individual down cycles to look at for these guys. But we can look at other similar stocks and get an idea of what the downturns are. And I pretty much, like I said, I bought these all as a group back then, and you can see that was pretty close to near the bottom of a real super cycle and COVID. So to me, I don't usually overweight my bets. That was a huge overweight for me at the time because it seemed like a no-brainer and it worked out. So that was great. The next downturn will be trickier because, well, hopefully there's not another pandemic. And if we do, I'd have one. I doubt we're going to shut everything down like we did before. So really, it's just about kind of looking back on these cycles and understanding, what could possibly happen. Sometimes these oil cycles can be really deep and long, like in the 1980s. And then from 2015, we actually don't see that with this one nearly as much. They were much more stable during this time. But most of these, if I was to pull up like Valero, maybe let's look at Valero and see what they look like. So yeah, again, similarly, not like a super huge drawdown here like some of the oil companies, which is kind of good because you get a little bit different type of price action basically. But because the earnings here, let me pull those back up again. You can see even from this short time period, earnings are very volatile, right? They fell 60% in 2016. They were falling going into COVID, and then of course oil was negative and nobody was driving. So they went totally lost money. Lost money in 2020. Then we had this giant boom, right, coming out on the reopening, the stimulus money, blah, blah, blah. Earnings jumped back up again really quickly. The stock price followed really pretty slowly, honestly. I can't believe they just peaked to this year. I mean, that kind of amazes me. But now I think it's clear to see, you can see earnings are falling. They peaked at $18, almost $19 a share. They're already expected to be $7 a share this time. So I don't know how many, if that's like 60% less or something like that. It sounds about right. Than the peak. And we don't know where this is actually going to bottom. So analysts think they're going to improve next year, but often they always think that, and then you can't really trust them on these cyclicals. But the reason this is important is because we can't really use earnings to guide us here because they fluctuate so much. All we can use those for is to identify the fact that we can't use them very easily for evaluation. So what I use instead are historical drawdowns. Again, we don't have a ton of data for this particular stock, but we do have some here from COVID, fell more than 60% off its high. And see if we can get kind of this middle one here. I mean, you got to remember this isn't even going to be a recession like in 2018, 35%. And then now, let's see what it's down right now. Definitely in the middle of a drop. So we're over 30% off the high. And this high was very spiky. This is kind of something worth paying attention to if you're going to measure from the top of a high here. When you get these spiky highs, it means sometimes the stock prices can fall farther off the highs because they have these kind of blow off tops sometimes. So you want to kind of keep all that in mind. Basically, I was just looking at HollyFrontier today before I even decided to do this video on Phillips 66. And let's take a look at it actually, because I want to, since I spent a little bit more time on it. So a similar pattern, right? A little bit more pronounced with everything. It's a smaller company. Let's see what they're down here. Because I was trying to decide like what would be a decent buy price. Now, so they're down a little bit more. That's actually good potentially because it means I'll get a better chance at a lower price. And hopefully if it recovers, you can see they've had good recoveries. If you go from this peak, we have a recovery here, 1, a recovery 2 here, recovery 3 basically. Again, if you take off this spiky top here, and then a bounce back again with kind of like a double top going on here. But overall, they come back from these down cycles. So if you buy them when they're down here, which is what we try to do, I won't pick the spiky top. I'll just pick like this one. Not even at the top. You can get those 100% returns. I mean, nothing's ever easy, but relatively easy compared to other ways to get a 100% return. But the key is you want to take profits. So that's what I did with this one back in 2020 as well. And now it's probably back down below where I sold it from. Let's see. I got it pretty cheap, so maybe not. Yeah, I nearly picked the bottom. So it's lower. I would have sold it around $45 a share. So Now it's on its way back down again. But I was looking at this one today, and I thought originally I had 75% off off its highs was where I was gonna aim to buy it. Let me see what they did during this one. So this is probably more like a 65% drawdown from peak to trough. This is probably where we're gonna get the 70, the deeper one during, yeah. So there's a big one like deeper than 80. So I was thinking about this, and I decided to change it from 75% off the high to 65%. Just because, these weren't like crazy tops. They weren't as high as this one. And we've had some inflation also during this time. And I felt like if I bought 65% off the high, I'd be fine. And so I kind of think the same thing for Phillips 66. But I would say because initially a lot of people are going to probably start buying this when it's like 50% off its high. So it peaked at 174, I guess we'll say, which is what it was. But so what's half that? I mean, I was just looking at it, but I'm going to use a calculator instead. $87 a share would be 50% off the high. So that was probably just back here, honestly. Let's see if I can get my thing to work. Oh, there we go. So that was like 100. Yeah, so that was basically June of last year. It was right down near that level. Looks like 89 is where it bottomed, so not quite. You might have to go back to 2022. But you really don't have to go back that far. And then you're coming off this spiky top. I think it almost certainly falls at least 50% off its highs. For me, I think I wouldn't be starting to buy this until it was more like 60% off its highs, because that spike is so high. We saw that during this downturn, and what was the other one? I don't know if there was another one we checked. But like 60% is off a spiky top like that. It's not like super hard for something like this to do. So we have, so that's $70 a share basically. So when were we at 70? Almost to 70 in 2022, but really you have to go back to 2021. So yeah, that's like a decent spot to be buying, I think. These lows probably won't be hit anytime, unless something crazy happens, probably won't be hit anytime soon. So I wouldn't be counting on it to get back down under 50. And 70 seems about right to me. What is this? If you use that as almost like a technical bottom, maybe come into like 73, 74 if you wanted to. If you wanted to be a little bit more aggressive, or if you really didn't want to miss it or something like that. But for me, the risk and the volatility and everything is worth it. If you buy it at 60% off the high and you hold it till it hits $175 a share again, even if it's like 5 years in the future, that's 150% gain. So the lower you buy, the more you can afford to wait. And usually what happens for me is I get a little nervous when it's hard to kind of reach these spiky peaks sometimes, especially if a recovery happens really quickly. So sometimes I bail out a little bit early after like 100% gain. Instead of aiming for that 150. It kind of depends on what's going on in the market and how quick it happened. And if it's just kind of a slow, gradual rise and it takes 4 years to recover, then I usually just keep holding on. But if it happens in like 18 months, which is sometimes what happens, then I'm more apt to just take my quick profits. Because earnings have to catch up, and sometimes the market gets ahead of itself and the earnings don't follow, and you end up waiting, and the stock doesn't go anywhere for another 2 or 3 years sometimes. So that's kind of how I approach it. But one of Donald Trump's big things is low gas prices. He knows that his base, and honestly most of the rest of America, don't like paying high gas prices, and they'll be very happy to brag about low gas prices. I expect he'll do everything he can to lower gas prices. How successful that will be, I don't know. But the initial reaction for these stocks, once they start going down like this, is going to be to go lower. So these aren't, or I would not be trying to be like a hero with any of these oil stocks at all, basically. But this is one I would be willing to come and buy again if it was like 60% off its highs, as a cyclical. And then you just have to wait. Sometimes you never know what's going to happen. Maybe it's a bunch of stimulus money. Maybe there's everybody starts buying SUVs again and flying more. And, you just never really know. Maybe there's supply disruptions or wars. I mean, you never really know what's going to spike oil. But if you buy, or gasoline prices, but if you buy low enough, then usually something will happen over time, even if it's just a gradual increase or inflation. Inflation's a big risk, I think, and it'll be interesting to see how that gets balanced with commodity prices over time. So it's definitely one I would buy. Valero I'd buy again if it got cheap. It still looks pretty high. I just checked it too, because when I was kind of checking all these out earlier, it has a spiky top too. It's falling fast though. It's down about the same amount. So let's take a closer look. But again, this is a 65% off the high when I'm looking to buy. So that's not quite as spiky, but a pretty good top this year still. And then, down here in these levels is probably where I'd be looking to buy. I'll probably make a video if I end up buying these, honestly. So just subscribe to the channel and stay tuned. And if I end up buying any of these refiners, I'll make videos on them and let you know kind of what I'm thinking. Valero has paid this dividend for a long time, and investors love it. Oh, it's only 3% now. I think when I bought it, it was almost 8%. That's how crazy. What was this? See if I can. 7%. That was in December, and I bought it cheaper than that. So, yeah, I mean, I bought this when it had an 8% dividend yield, and people really like that yield. So it might put more of a base under this one because people, dividend investors and high yield investors, will probably start getting interested once it gets down like 6% yield. So it might fall a little bit slower. I'll have to think about this one some more in terms of when I would buy it again. But again, another good company I would buy. You can see it's been cyclical. Look at the Great Recession here. And then, of course, COVID, big declines. And then this kind of crazy boom bust that happened. I honestly, it blows my mind. It shouldn't, but it does, that people were paying $180 a share for this just this year. When all you had to do was kind of look at the fast graph and use a little bit of common sense, and you could tell that this wasn't like sustainable. This is just making up for some of this, basically. So now the question is, where do these earnings end up the next couple of years? And probably this next year they're going down. So I don't think this is the bottom. Definitely wouldn't be buying yet, just like with Phillips. And minimum 50% off the high before I would think about buying it. This one. And honestly, it's going to be more like 65%, 60% for me off the high. All right. Hopefully you found this useful. It was a little bit of a different kind of video because these are cyclical businesses. There's not a lot of exactness to any of this, especially we've had such crazy cycles. Really since 2008, since oil was like $150 a barrel, and then we had the Great Recession, and then we have fracking boom, and then that Saudi Arabia starts pumping a bunch of oil, and then that goes down, and then just when it's recovering, we get COVID, and that makes oil negative for a couple days, and then you have all the reopening. I mean, it's just been kind of nuts. So there's not like a whole lot of precision here, and I think you just have to like embrace that and say, okay, when it gets cheap enough, I'll buy it, and just hold and wait, and hopefully I can make 150% return over the next few years whenever the next upcycle happens, because it usually does, right? So, but we aren't there yet. All right, thanks for watching, everybody, and see you later.